Hi everyone, it's Grace. Welcome back to my channel. So as you can see, the background for today's video is a little bit different because my home is going through some renovations, and I hope that I can get back to normal as soon as possible. So like right now, basically I'm just recording the video from a hotel room. So if you hear any weird background noise, I really apologize. So hopefully you can get back to see the usual studio background as soon as possible. All right, so in today's video, I'm going to introduce a couple of maps, which is related to the rent to income ratio, which is very, very important to tell you the health status of the current housing market. All right, so before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos like this are uploaded. Also, feel free to give this video a thumbs up if you find it useful. And another way to support my channel is by donating any amounts that you feel comfortable with, either through PayPal or Cash App. The username for those two platforms are exactly the same as my channel name, XueZhangPA, and I'm going to include the links in the description down below. So I really appreciate your support for my channel, which allows me to push out new and powerful content and financial tools that as you can see on my channel and also the tableau profile. And I do believe that these financial tools are very, very important. Either you're building wealth or weather the storm in an upcoming recession, such as what we're seeing right now. All right, so now let's get started. So the first thing that I want to show you is the up-to-date rental price for all the major metropolitan areas in the US. And this data is actually from Zumper. I actually compared different type of websites, such as Apartment List and then Rent Cafe, Zumper. And sometimes I feel like some of the data is not that accurate. Because when you're seeing like a median price, you immediately reflect in your mind saying, you know, is this the type of rental price that you're seeing in the market? And then after comparing all these websites, I think that Zumper is probably more accurate in depicting like the median price, the rental price for as of May 2022. All right, so in this chart, I actually include both the 1-bedroom and then 2-bedroom rent, just to give you an idea like what is going on in the market. So you can actually see here like all these rental prices, like some of them are like especially high. For example, in the Boston, Cambridge, and Newton area, the 1-bedroom rental prices at $2,500, and then the 2-bedroom is at $3,000. So these rental prices are jumping like really, really fast, especially from last year to this year. All right. So one thing that I noticed is that the housing price and the rental prices are jumping at the same time, which is very unusual for this type of situation. Because if you think about it, when there's like the housing prices is increasing, immediately you're thinking that the rental price should be down because there are more buyers, right? But the situation is reversed because there are also a lot of investors in today's housing market. So that's why a lot more inventories are not available for people to buy as primary residence. So that's why a lot more renters are in the market. And so that is the primary reason why rent is going up at the same time when the housing price is going up. All right, so the next metro area that you're seeing a great price jump in the rental price is the Los Angeles area. All right, so I'm actually combining these data into a metro area so that it's easier to understand. It's not precisely what you're looking for in your particular location, but it can reflect the metro area that you're in. So in Los Angeles, Long Beach, and Anaheim, California, the 1-bedroom rental price is around $2,360, and then the 2-bedroom is around $3,180. All right, so I'm just giving you a little bit of the idea here. So in the next chart that I'm introducing, you can actually see the rent to income ratio, which is even more important to tell you, like, is it healthy? Is it sustainable for both renters and landlords? Those are the questions that we have to answer in order to assess, like, what is the current situation in the housing market. All right. So the next metro area is Miami, Fort Lauderdale, and Pompano Beach, which is where I'm currently located right now. So for those of you who are either living in this area or have a rental property in this area, you know that like in Miami, the rent is going up like crazy. We have never seen like the year-over-year change in price going so much. All right. So just to give you an idea, for the one bedroom, the current median rent is $25.50, which is quite a jump. It's like double-digit jump, right? So it's just getting out of hand. And in the next chart, we're going to see analyze a little bit why that is the case. And then for two bedroom, the median rental price is at $3,500, and I'm seeing like rental jump above, like a lot above this, in a lot of the areas that have better views, either because of the height or because it's close to the beach. All right. So the next one is New York. And what is interesting to see is that the one bedroom rent and the two bedroom rent are not that far away from each other. This is very interesting. So if you're from the New York and Jersey City housing market, can you tell me a little bit about like why this is the case? Like the one bedroom and two bedrooms are not even like $200 apart from each other. All right, so that's also very interesting. And then I'm also seeing the rental price in the San Diego and Chula Vista and Carlsbad, California area. I hope I pronounced that name correctly. And then the one bedroom rent is at $2,470, so it's close to $2,500. And then for two bedroom is $3,100. Right, so that's a little bit similar to the Los Angeles area. And then we're also seeing the rental price in the San Francisco Bay Area going up quite a bit. For one bedroom, the median price is at $2,900, and then for two bedroom is at $4,000. So that's insane. But like in general, I know that like the Bay Area, the housing price in the Bay Area are going up like really crazy. So it's like really overvalued. But at the same time, I'm also seeing a lot of the inventories are picking up in areas around the Bay Area. So I'm not gonna go into the housing price in this video. We're going to reserve that for another topic another day. All right. So in the Seattle area, I'm also seeing the rental price going up quite a bit. For one bedroom is at $1,820, and then for two bedroom is at $2,650. All right. So in a lot of these like metro areas, you're seeing rents are like just going up like crazy. Right. So the last one that I'm seeing like for one bedroom that's above $2,000 is the Washington, Arlington, and Alexandria area, which is in Washington, D.C. And then the one bedroom apartment price is at $2,290, and then for two bedroom is at $3,000. All right. So so this is pretty much the situation for the rental price. And then for the other metro areas, you are actually seeing the one bedroom to two bedroom close to $1,000 to $2,000. So they fall into this area. All right. So in the next chart, I'm going to show you a different type of indicator. And I like personally, I think that this indicator is more important than the absolute numbers that you're seeing here. All right. So for so the way that I calculate this rent to income ratio is that I take the household income, right? So whether it's one person, two person, or people who are single, who have kids, or whatever situation it is, right? So it's like a household income. And this data is actually from the US Census Bureau. So the data, the most up-to-date data is for 2019. So I kind of have to calculate it a little bit before I can put it into Tableau. So the way that I did a calculation is to increase the year-over-year change in the household income from 2018 to 2019. So from 2019, I basically just multiply it to 2022. But because 2020 has a COVID recession, so I actually reduced the year-over-year increase by half. And then because we're now in May, we're not at the end of 2022. So basically, when I'm calculating from 2021 to 22, I only accounted for 5 months out of the 12 months. So that's how I get the household income. All right. So this is only the median household income. So it's not reflective of the your particular situation, but it can be typical of the situation that we're seeing, just as a general example. All right. So the rental price, so how I calculate the rental price is like this. All right. So I want to be able to tell you the mechanism behind the calculation, so it's more reflective of the situation that we're in right now. All right, so as you can see, I combined both the 1-bed and 2-bed rent into the ratio. Obviously, there's a little bit of difference between these two types of properties. So what I did is that I take the average of the 1-bed and 2-bedroom, and then for this average rent, I just divided by the monthly income, right? And that monthly income is actually before taxes. All right, so that's how I get a rent to income ratio. And then in the color legend here, I basically just divide the two polars. The lower polar is the 20% and the higher polar is the 50%. And then for the lower polar is a blue color, and for a higher percentage, you can see a red color. All right, so before we jump into the rent to income ratio, I just want to show you the results of a poll that I did earlier. So I'm basically asking you, what is a reasonable rent to income ratio? And our income is before taxes. And I think that this result is kind of partially reflected in what I'm preparing for today's video. I'm actually glad to see that more than 50% of you say that 20% rent to income ratio is probably more reasonable, and then another 33% of you say that 30% is probably reasonable. So this basically tells me that a lot of you are aware that the rent to income ratio should be as low as possible, if not close to 20%. So let's just refer to a data point from the Housing of Urban Development of the US Department. So that tells you that the golden rule for the rent to income ratio should be no more than 30%, and that is the before tax income, right? So this 30% basically tells you that if a renter is paying less than 30% of the gross income towards the rental price, then it's sustainable. Then the renter is able to use the other parts of the income for other things, right? So I think that this is a good general rule. However, when you're thinking about the after-tax ratio, right? So if the before tax ratio is 30%, then the after tax ratio may be 40% or 50%. So that's in a very risky zone where you don't have a lot of leftover income to cover other things, right? So I think that the poll results shows you that you're very aware of the risk of either inflation or other types of costs that's embedded into the household income, all right? So from this map, you can immediately tell that there are some metro areas where the rent to income ratio is out of whack, right? It's just crazy. And I'm actually taking a conservative approach here. So the real situation could be a little bit better than what is shown in the map. All right. So I'm just gonna tell you like what is the rent to income ratio that we need to be aware of. So in the Miami and Fort Lauderdale, Pompano Beach area, basically the 3 counties in the South Florida area, the rent to income ratio is at 55%. And because the way that I calculate the annual income is that I basically just multiply the 2018 to 2019 year-over-year increase for 2020, 21, and 22. So the household income should be a little bit higher than this. And then the rent to income ratio could probably be a little bit lower than this. However, I'm still seeing at least 50 to 55% rent to income ratio for before tax. And that is a huge risk factor. I'm not quite sure why the annual income in the South Florida area is actually, I would say, a little bit lower compared to the other areas in the US. But that is the real situation. And you're seeing that this is a huge risk factor, especially for housing crash. I understand that there are a lot more people coming from all of the country to the Miami area. However, if you're paying more than 50% of your of your income into rent, that is not normal. You don't have enough disposable income to pay towards the other costs, especially because we're heading into a very high inflation environment as we see right now. And then I'm like right now I'm seeing like the inflation rate can potentially go to like 10% in the next few months, and that is very, very risky. What I hear in this area is that a lot of people are actually bidding on the rental income. Like they're not just paying month to month, and some of them are even paying like 12 months rent all at once in advance, and that's not normal. So just to give you an idea that this is happening in the market, and if it keeps going on, right, for the rest of the year, it can be a huge risk factor. Think about it. If for some reason the environment is changing and then the jobs are pulling back a little bit more, and then when people for some reason they get unemployed, or their jobs are taken away because of layoff or whatever reason, whatever is happening in the company, then they lose out, right? They lose out the income, the cash flow that's supporting their rent and supporting their current lifestyle. So that could be like a huge risk factor for both the renters and the landlords. All right. So I just want to point that out to you. And then for another area that's I'm seeing a similar pattern is in the New York area. So in New York, the household income is a little bit higher at $90,000. However, we're also seeing that the rent to income ratio is at 49%. So basically 50%, right? So that is also a huge risk factor. For some reason, if people lose their jobs, if their company decided to lay off workers because there's not enough revenue from consumers, then if they also don't have any savings, that could be a huge risk factor that can trigger property owners to sell off their assets because they can no longer accrue the rental income cash flow coming from their renters. So just to give you an idea that these two metro areas are experiencing very high risk factors just from the rent to income ratio. All right. So let's take a look at some of the other areas that are also having sort of like a crash alert. All right. So the other area is Los Angeles. I'm also seeing that the rent to income ratio is at 39%, so close to 40%. So that's also not as sustainable as at 30%. right? And then in San Diego, it's at 37%, obviously a little bit lower, but also a major risk factor. All right, so let's take a look at the other areas. For example, in Tampa, I know that like Tampa, St. Petersburg, and Clearwater is also one of the areas where there are a lot more developers coming in. There are also many people who are interested in buying in this area. And I'm also seeing the rental price increase very fast. For example, the 2-bedroom rental price is at $1,950, so close to $2,000, and then its current rent to income ratio is at 35%, right? And then in Orlando is at a little bit better than Tampa, but the rent to income ratio is also at 33%. All right, let's just go over some of these other areas to see the rent to income ratio. I'm actually happy to see that a lot of these areas are in the blue tone. So that basically means that they're either right at 30% or they're probably close to 20%. So that's very, very sustainable. Even though the rental price is increasing, but as long as you fall between the 20 to 30% rent to income ratio, then both the landlord and the renters are able to sustain at the current price. All right. So in Atlanta, the rent to income ratio is at 31%. Then in San Francisco, I'm also seeing the rental income, the rental increase is kicking in, right? So its rent to income ratio is at 33%. So that's a little bit too aggressive, and if it keeps going at that rate, you can see the color changing from light blue to orange and potentially to the red color. And as a landlord, all right, I understand that for a great return on your property, you want to increase the rent, but also you have to consider if it's a sustainable rent to income ratio for your renters, right? So you have to consider both sides, right? So in the Phoenix area, and then the rent is also increasing, but the rent to income ratio is of 24%, so that's a lot better, right? And then we're just gonna go over a little bit of like these metro areas so you can get a little bit of everything in this video all in one take. All right. So in San Antonio, the rent to income ratio is at 21%. That's a lot better. All right. And then in Houston is at 23%. In Dallas Fort Worth area is at 27%. So this is close to 30%. So it's also acceptable. All right, and then let's see, in Charlotte, Concord and Gastonia in the North Carolina and South Carolina area, the rent to income ratio is at 25%. All right, so just in general, we actually saw that. Let's go to this map, this chart for a little bit. We actually see in Washington, Arlington, and Alexandria area, the 1-bedroom rent is close to $2,300. So that's a little bit higher than the national median. However, when we're seeing the rent to income ratio is actually right at a little bit lower than 30%. So that's also acceptable. All right. I'm saying it's acceptable because it's lower than a golden rule. However, you also have to factor in the tax rate and also the inflation rates that kicks into other items such as food, gas, or whatever it is, right? All right. So in Baltimore is at 21%. At Philadelphia area, it's at 24%. Right, and in Boston, Cambridge, and Newton area, it's at 32%. So this one is a little bit higher than normal. If it keeps going up, then it's a huge market crash alert factor. That's just unavoidable. But if this rent to income ratio keeps going down a little bit, close to 30%, then it's more sustainable. Right. So let's go to the Midwest area. In St. Louis, it's at 19%. That's very, very sustainable. It means that the rent still has the potential and space to grow for a little bit longer. All right. And then in the Chicago area, we're seeing 28%. So it's also getting close to the 30% golden rule. I mean, if you're an investor, you don't necessarily have to follow these rules, but you also, get a general idea, like what is the rent to income ratio for your tenant, right? So for an individual case, you can actually use this indicator to gauge a little bit better, is it healthy? Is it sustainable? So this is the type of question that you need to ask yourself, especially in the high inflation environment that we're in right now, because a lot of things can change because of the Fed's aggressive approach to increase rates and shrinks the balance sheet. All right. So in Detroit, we're seeing 20%. So that's very sustainable. And then in Minneapolis, we're seeing 19%. So in a lot of these Midwest areas, we're seeing close to 20% rent to income ratio, except for the Chicago area. And then in Denver, we're seeing 25%. So that's like, that's a very neutral zone, right? That's like in a very safe zone where it doesn't go up to like 30%. It's remaining in that very sustainable zone. All right. So in Portland, we're seeing 24% rent to income ratio. So that's also very sustainable. And then in Seattle, we're seeing 26%. All right. So this gives you a general idea, like not only tells you what is the current rent, median price rent, right, in these markets, but also what is the rent to income ratio? Is there a risk factor for the market crash, right? So right now, the two areas that I'm seeing this type of alert is the 3 counties. I just sum it up a little bit. Just to bring it a little bit general. So the 3 counties in the South Florida area are seeing major market crash alert that if one situation changes, it can trigger a landlord property sell-off. All right. So this is a huge risk factor that you should be aware of if you're an investor in that area. And also the other area is the New York and Jersey City area, where the rent to income ratio is close to 50%. That's a huge risk factor. All right. So this is pretty much today's video. And then I'm going to put up these 2 charts, map and charts, on my Tableau profile. So you can go ahead and go into them and see a little bit clearer. And then in the next video, I'm actually going to go into more metro area markets to tell you a little bit about what is the ratio between the household income and the housing price, right? So it's not just the rent, but also the housing price. All right. So I hope you enjoy this video. I do find that, when I'm interpreting these data, I have to be very careful, like how I compile this data. So I explain it very clearly to you, and I hope you find it useful in your strategy. So I really appreciate all your support and donation into the PayPal and also the Cash App. I also include a link tree so that you'll be able to click into it and then make the donation from there. All right. So thank you very much for watching today's video, and I hope you enjoy it. Let me know if you have any questions or comments in the description down below, and I'll see you on the next one.